Hello traders, Damien here. I wanted to make this post-session trade review for the session we had today. We had two intraday trades and one longer term trade that closed overnight for 49 points. I had a trail in at 50 points, but between slippage and stuff, got closed out at 49 points. That was a very nice gain on 200 contracts. We'll be getting more deeply intimate with the longer term trades. The strategy is the same, with a couple of little differences on how I scale in and why I scale in at those levels. And as we get more into the sharing this strategy here with you guys, I'll be covering those points. So today I want to focus more on the intraday and the two intraday trades that I took. I also did not do a post-session review yesterday, although it was a losing day because it was part of the live stream anyway, and the explanations and the detail were in that video anyway. But today was not a live stream, so I took two trades and I wanted to break them down and speak to you about the post-session review. So one of the first thing I want to do is, because you've heard me mention harmonics and how I use harmonics. And harmonics are a form of market symmetry. The market strives for symmetry. They are good target points. They are good estimation of exhaustion, and along with ratios and the confluence of those things. As you get more involved in this channel, as you follow me more and the methodology that I use, you will hear terms like confluence, ratio exhaustion, harmonic exhaustions. All those things may not be known to you now, but they will be. They're definitely in the video lessons. But I want to get through this without making it a long video for you guys. But I do want to share with you a proper way to draw harmonic lines, and also for you to start experimenting with drawing these lines and projecting them forward. And don't be afraid to make mistakes, okay? But basically you want to have a couple of things. You want to have a clear low and a clear high, right? And you want to have a proper correction from there. So what is a proper correction? I use at least a 38% retracement, Fibonacci retracement, to qualify something as a proper correction. Now, is this the only way to do it? No, it is not. You can also go off of clear high, clear low, clear high, clear low corrections. That works as well. But in my experience, I like to use something that can be qualified without any subjectivity. So if I draw a Fibonacci retracement on this swing, I can clearly see with any bias whatsoever whether it did or did not achieve a 38% retracement. So in my experience, the 38% is that first level that I like to see a swing correct to before I call something either a main swing or a proper swing. Okay? But having said that, we have a clear low, clear high. We've clearly corrected past the 38%. This is a swing, okay, that has some harmonic properties to it that I can go ahead and draw and project forward. And as you can see, as price reaches that level, it has an immediate harmonic exhaustion, and price tends to want to correct to some extent. Okay, we don't use words like reversals. We don't use words like double tops. Okay, whenever price revisits an area, for me it is a retest. And whenever price changes direction, it is a correction. It is not a reversal. It is not a change in trend or anything along those lines, because price corrects. And I think that once we start using proper terminology, we don't start over expecting for the market to achieve or produce a unreasonable thing based on the overall strength and weakness. Okay, so feel free to start thinking along the lines of symmetry, balance, what the market is working towards. These are all things that I look at to different depths at different places in time to help me forecast and have an expectation, because I always want to have an expectation when I trade. Okay, so now we have clear low, clear high, The market made a new high. Forget about what's in the past. We don't care, right? We got to start somewhere, and you can always keep going back and back and back, and you'll end up with 1,000 of these. It is unnecessary. We have a clear low and a clear high, and we have a clear higher low here. This low is higher than this one, so we have a higher low. The expectations for another new structure high. Where to? Well, we have the market came to this area and had a retest. Okay, not a double top, a retest. Because in the minds of the retail traders, a double top means, oh my God, I sell off, we're going to go all the way down here to God knows where. That's not the case. What is the expectation? The expectation is for the market to continue to press higher. So we have a higher low here. We have a clear low, clear high, proper correction. This is a line that I can harmonically push forward, okay, project forward, I should say. And we also have a clear low here and a clear high, which was a retest, and another what? Proper correction. So we have a smaller order flow trying to develop here. Can I use that and project it forward? Yes, I can. I have a clear low, I have a clear high, clear correction, proper correction to the 38%. I can move that forward as well. Now, where we project these forward from is very important because you can find yourself making some mistakes. Okay, this is the clear low, clear high. This is the market came to this point here. Ratio exhaustion. Okay, we had a correction here. Okay, is this swing from here to here, is this a proper correction of that swing? Okay, the answer is yes. If I draw a ratio, it did hit the 38%, right? So now I can project this line forward, and as you can see, as price comes to this area again, look what happens. Okay, surprise, surprise. Harmonic exhaustion again. What about the smaller line? Well, let's project that forward. We saw that this is the clear low, this is the clear high, this is the proper correction of that, right? So we need to project it from where? From where that point hits. And once the market hits there, surprise, surprise. Okay, same situation. It happened to be confluence of two ratio harmonic exhaustions. The market corrected. Okay, again, now what's happening? Well, we have here, okay, we have a proper correction of that swing, right? So where am I going to project it forward? I'm going to project it forward from that point. And as you can see, price got into this area here and started producing what? The sellers started coming in. There's harmonic exhaustion there, ratio harmonic exhaustion, and look what happens. It's okay for things to overextend a little, but it gives you a pretty good idea from a forecasting standpoint, where that symmetry comes in, that the market becomes oversold, overbought, if you will. Okay, now could we take this to another level? Yes, we have a clear low, clear overall high, and a proper correction of that, right? That's on a larger term scale, right? Can we move that forward? First, we got to verify that it's a proper correction. It is. So now I can draw clear low, clear high, proper correction. Okay, can I project that forward? Yes, I can, and it comes into another general area. See, these are things that are really nice tools to really have a general idea of what the market is working towards. What can I expect to be a realistic profit target? These are ways that you can draw it forward. And I can see that we also have in this price action, we have a nice little Gartley pattern here that completes right around here. And let's verify that visually. And then we'll get into the trades, okay? So we have a clear low, clear high, nice anchor leg. Okay, harmonically balanced as well, as we saw by the previous ones. We have a 618 here, great. And then we have 786 here, golden zone here. We have a little ABCD pattern here that completes right at the 78. Okay, nice completion point here. Then the market rolls over and comes up. Very nice little Gartley pattern. I'll draw it with a triangle so you can see visually what that looks like. We'll get into the patterns again here in the future. I do occasionally still trade them, but this is a nice little Gartley pattern here. Pardon me, we'll get into the trades right away because I do not want this video to be too long. But you guys are going to do so much learning here. It's going to be so cool, the things that we're going to be putting together here. So we have a nice little Gartley pattern here that completes, perfect completion point. Nice little ABCD completion point there as well. And then the market just takes off. And that was quite nice to see. So into the trades now. Now you guys understand how to draw these harmonic lines better. Again, this is something that we're going to build upon, so I don't feel like you need to watch this video 1,000 times and grab every little thing that I said. You know, we're going to get into all of these things as the channel develops. Okay, so came into the room here a little late to trade. The market opened somewhere around here, and I have to ask myself immediately, what is the expectation? What is the market working towards? I projected some lines forward. I knew what things were likely to happen. I also saw here that had a clear low, clear high. Sorry, let me all right, so well, here the market pressing up. We see that the sellers tried to come in, they got absorbed, price came up higher. And I saw that on this way down, the buyers were very invested in continuing to want to take price higher. And as price came up here to retest this area again, not a double top, not a triple top, it's a retest of this high. Okay, every time I saw price come into this area, the buyers were eager to defend and they were able to move price to the next level. Okay, here they did not achieve the new structural high, but I saw less and less sellers, so I decided to get very aggressive here because we have not achieved a proper correction of the main swing. That main swing was from here to here. That was already established. There was an attempt to correct here that went nowhere, not to mention that this was all another previous correction of another main swing. So this was the main swing. I'll draw the ratios in. You saw we're nowhere near the 38%, but I saw that the sellers were coming in and the buyers were eager to absorb that money. Okay, and the sellers were unable to get anything going here, so I got very aggressive. I got long here. Okay, and I knew that technically my stop should be all the way down here below the main swing structure, but I did not want to take on that risk. I also had no room to protect. You know, my rules are that when I enter at the tested structure, I get to a break even. I had no room to do that there. Okay, so I decided to put my stop in an area that should have held had this area held. And I also decided to break my rule on the break-even point because I had no room to protect my trade. So I left myself pretty vulnerable there, but the risk-reward wasn't there as well. But I saw so much weakness on the sellers overall that I decided to get very aggressive there and put my stop right below that area there, and I ended up taking a loss of 22 points. My expectations had not changed. That doesn't mean that I am looking for shorts at this point because price closed below here. This is the main swing. We expect an overall new structure high, so we have to make sure that we stay on the proper order flow that we're trading. Okay, so I was looking for a long overall. Price came into this area here where the buyers were all over to absorb and even further back. And then we had a nice rotation in price there, and I took the trade, and immediately price started moving in favor from my entry, and then price got hung up here where the sellers tried to defend before and couldn't get anything going. Then the sellers came in here, okay, and I did see a mix of buyers trying to come in and defend their levels, and I saw the sellers also coming in trying to absorb that area, and I saw that my trade was weakening. But again, I am not here to talk myself out of a trade that I'm already in. I have set rules. I have a set expectation, and sometimes it takes a little longer for the trade to develop, and in that development also is a sign of weakness, right? Because ideally we want price to bounce off of our area of interest right off of that entry signal and move very efficiently, but the market doesn't always work that way. Okay, sometimes trades break down and sometimes expectations fail. You know, but if I align myself with the expectations and with the strength of that market, then more often than not I will win these trades, and that's what I'm looking to capture. Okay, so again, I saw an area where the sellers had failed to come in and win, and where the buyers won and the buyers started defending. So I felt pretty good overall about what I saw here, as both sides being very eager to defend that area, the sellers coming in hard to try to absorb and win, but them slowly getting eaten up And when you see that, you just basically can't move price. When your money gets consumed and absorbed, no matter where it's at, you just can't really move price. It takes twice as much to get anything going. And eventually, I had to sit here for a while, but eventually price did move in favor. And once price got to the well, I'll draw you the 127 in a little bit. But once price got back to this area and tested these highs, I needed to make a determination whether, the market was going to correct here back to the downside, as price has been able, the sellers were able to defend these highs and push price lower to produce a complex correction higher low. But I didn't see anything here, okay, because they invested so much money here, and the buyers just ate it up that the sellers just ran out of money. Remember, I said a little earlier, if you run out of money, you can't get anything going, and if your money gets absorbed, by the other party, then it's not effective. You can't do anything with that. So as price came down here and the sellers tried to defend this area again, you're running low on money. You really can't do much about that. Then the buyers came in to defend where they had come in to absorb before. Okay, so that was important. And as the buyers came up, the sellers tried to throw another Hail Mary pass here that ultimately failed too, and then price came all the way up. Now I'm going to draw it this way because the F9 stops the recording. I have to fix that. Fibonacci extension. So now price came here. Whoa, sorry guys. Fibonacci extension. Okay, so now price comes here. We have once price got to this area here, I started trailing. I trailed below the minor structure here because the market was very strong to the bullish side. But it was also getting near ratio and harmonic exhaustion. So I wanted to, once price got to the 127 here, I wanted to give it some room because of the underlying strength that I saw in the buying here, okay? And that the absence of selling money here, this thing is probably likely not going to have a very good correction. But once price got past the 38%, I felt good about putting my trailing stop at the 127, just leaving it there and see if price can just keep rallying up and make me greater gains. It turns out the price came back down and just tagged my entry there, my stop trail, and I got taken out for 81 points. So long story short, 2 trades, one for a 22-point loser, one for an 81-point winner, 59 points in the green for the day. That is my post-session review, and as things move forward here, we're going to getting a little better organized, a little better presentation here to make these a lot more enjoyable for you guys. But the goal here is to teach you all how to read the charts, how to take action, how to be decisive, how to trade with rules, how to control the emotions. All these things are going to be talked about and worked on as the weeks progress and as these videos mature and grow, and you guys start asking questions, and we do detailed videos based on questions asked. I think it's going to be very interactive, very intuitive, and a great channel and resource for everyone. Thank you very much for your time, and till the next trading session and next post-session review, good luck and good trading.